Business news now with Nona Peltier. Kiwis love their chicken. Nona, by golly. Changing preferences, though, having an impact on sales of two New Zealand listed companies. And also, I'm really looking forward to the Fed because we've been previewing this
That's right.
all year.
We got some good stuff to talk about. Well, let's see.
Okay, start with chicken.
Let's start with the chicken. So, so we've had a couple of companies report financial data today. Restaurant brands, their sales numbers tripled in the most recent quarter.
Tripled?
Yeah.
Year on year? Or no, quarter on quarter?
Yeah, no, it could be year on year. Let's see, might have been, double check. Well, anyways, it's a big increase. And I
want to speculate here, and this could be wrong, and I look forward to feedback from everyone on this, but restaurant brands recently have had a lot of good publicity around the treatment of their staff.
Well, yes, because they're paying them.
KFC, yeah, that's right. Permanent contracts, people know where they stand, all of that stuff. And it's been a lot of good publicity. I wonder if people, I don't know, have people been going to KFC?
Eating more chicken as a result?
Well,
I'm not sure because could be, well, the Australian, they've bought a franchise in New South Wales, and that's contributed quite a lot to their new increased growth there. Right. So, no, people love the chicken, especially if it's already cooked. Now, on the other side of the the ledger here is the unprocessed raw material that is produced by Tegel chicken. So Tegel, they did a very good first half result, more than double the year earlier. But the market wasn't happy because they're going to miss their forecast for the full year. And
so revenue up, sales up, but
margins lower.
Right.
And the reason why, so they're selling more chicken, but they're making less money off of it. And so why is that? The chief executive thinks it could be that basically preferences have changed. Now, I did some reading on the OECD website, and believe it or not, chicken. Yes, indeed, chicken. And it turns out that people have changed their preference for the kinds of cuts they like. So instead of, the breast and the thigh, they're going for the cheaper cuts of the wing and the drum.
Right.
And so those lower valued pieces potentially, I guess, affect their margins. Yeah. I'm not exactly sure, but hey, we've got a bit from Phil Hand, and he was talking about when it comes to chicken, it comes down to price.
I guess from a pricing point of view, I've seen in certain segments of the market and certain products quite sensitive pricing. It is pretty tough out there at the moment, and there's good competition at the retail level, and I guess that's good for consumers. I think the market might even be changing a wee bit, and people's consumption habits changing a wee bit as well.
And that was Phil Hand. They were talking this morning at the investor conference. He didn't give us an interview, though, so I can't say much more than that. But in any case, look, I have to tell you, the U.S. Federal Reserve, in fact, did raise interest rates today. Yes, indeed, between, so from a quarter of a percentage point to between 50 and 0.50 and 0.75. So it's still under 1% there. But never mind, the market was excited about that, not so much because of the interest rate hike itself, but because the U.S. Federal Reserve is looking to raise interest rates over the next couple of years up until 3% by the end of 2019. Wow. So that really made the dollar take a bit of a hike, and of course, not surprising, the New Zealand dollar, but only a cent, which isn't a lot against the U.S. when you consider how much it's moved to a 14-year high. So the New Zealand dollar is trading at 71 U.S. cents, 95.6 Australian, and 56.6 pence. And on the share market, Tegel's share price closed down almost 17% as a result of that revised down forecast to $1.29. The top 50 index then fell about 0.5%, or by 49 points to 6,749.
Auckland Business reporter Nona Peltier. Thank you, Nona.